So first thing you have to figure out the sales amount, right? And it was supposed to be given by another like department, so it's a given number. And we were assuming that it was increased by 20%, right, from 2016. So it should be 2016 times 1 plus is 20% increase, right? So the sales increase percentage is given on B20. So you just click this part, close the parenthesis, and enter. All right. And then the amount should be 443,160. All right. So this is something, that you can't do anything about. It's the starting point. And let's suppose that it's just given to you. And then let's move along. So the next thing would be COGS. And COGS is, if you recall from the direction, it's one of the items that is varying directly with sales. So I will just try to write down that formula, what I just explained to you there, in terms of Excel formula. Okay. So you will need an average, right? So you start the formula with average, equal sign, average. Okay. And then open the parenthesis. No, average. You will just have to, yeah, it will be average. It has to be accurate, exactly the same, the same as what Excel would require you to write. So average, open the parenthesis, and you will have to calculate the ratio, COGS divided by sales ratio. So COGS divided by sales, all right, for 2016. But there is one more thing I want you to do with the sales amount. Why don't you press F4 twice? So that's the ratio for 2016, and we want another ratio for 2015. So we will do exactly the same thing after comma. So press comma. And then again, COGS divided by sales. Okay. But then with sales, you will have to press F4 twice, because you again want to fix the row number. Two ratios in the parentheses. You are ready to close it, right? And this should be it for the ratios for 2015 and 2016. And you're trying to take the average of these two. So you got the average ratio. And then the third step would be multiplying by the pro forma sales amount, which is right over here, 2017 sales amount. So you just click this part. Okay. And then again, press F4 twice so that you could fix the cell to B5. Okay. So whenever you are seeing a cell that wouldn't change, the amount that wouldn't change as you move along, just press F4 twice. In this case, it will be sales, right? But does everyone have a formula that looks like this? If you think you're ready, you can press enter. And let's see what you have in your cell. Okay, do you have the same amount as I do? 347,628, then you're good. Okay, so if you're good, we're moving down to gross profit. Gross profit is always sales minus COGS. Should have 95,532. And then, so everyone has up to 95,532, right? And let's move down to depreciation. Depreciation is the part that has to be connected between income statement and balance sheet, because you have to figure out this new depreciation amount that occurred due to the equipment, the purchase of equipment. So to figure it out, I actually wrote it down under balance sheet. So why don't you move to balance sheet? Okay, another tab. Okay, you scroll down And on B, starting from B32, there should be information regarding this new equipment that you're purchasing, okay? So again, we are purchasing an equipment that's worth 50,000 and the life is supposed to be 10 years. And we're trying to figure out the new depreciation that is just attributable to that new purchase. So to figure out the new depreciation amount, you can actually plug in this formula, right? It's very easy to use handy. It's not too complicated. Or if you can't remember it, you can actually use the formula that I wrote down over there, which is equal SLN, straight line method, and open. So let me just write it down for you. Equal SLN. That stands for straight line method, okay? And then open the parenthesis, and the first cell you want to put in should be the purchase amount. So in this case, it will be 50,000, right? And the second information will be the salvage value. It's 0 here, so you can just write down 0, comma. And the next information will be the life. The life was 10 years, right? You can just write 10, or I just wrote it down for you. You can click the cell again. You can just do whatever you want. But since it's very, very straightforward, the numbers are all very simple. You can just write down the numbers as well, right? And then you close the parenthesis, say OK, and it will just calculate the amount for you. The new depreciation amount is 5,000. Right? Does everyone have 5,000? All right, very good. And then you're ready to move to income statement now. So let's go back to income statement and go to B19, which says additional depreciation. B19. You will have B19 right underneath 40% tax rate. Right? So here, why don't you, if you remember the amount, you can just write down 5,000, or if you don't, simply put equal sign and go back to balance sheet and find out the new depreciation amount and say enter. And it will give you 5,000. So as additional depreciation, you should have 5,000. So this 5,000 is attributable to the new equipment that you purchased. So does everyone have 5,000 for cell B19? Then you are ready to calculate the depreciation expense. So what was assumed in our direction was projected depreciation expense for 2017 would be depreciation expense for 2016 added to it would be the new depreciation amount. So 2016 plus new depreciation, that should be equivalent to depreciation expense here. So what we should have here is 2016 depreciation expense plus the additional depreciation. Okay, so 26,820 plus 5,000. The sum of it should be your depreciation, which is 31,820. Okay, so a lot of people make mistakes here by just writing down 5,000, but that's not what was assumed. What's normally happening is, your depreciation just continues, and whatever new equipment you bought, that will be added on top of what you normally would have. Right? So depreciation should be 31,820. And then let's move down to sale and admin expenses. So if you don't recall, you can go back and find whether sale and admin expense has any relationship with sales. And it says that it's directly moving with sales. So simply what's happening is the same thing as COGS, right? COGS moved directly with sales, and so does selling and admin expense. So what you can do is you can just copy and paste. And what you will notice is that there's a line that was created which was not there before. If you want to remove the line, which is a miscellaneous issue, but still, if you wanted to do that, you go to this icon here that has this board, right? You click it and choose the second icon that has, the formula, the function mark, okay, that says formulas. Okay, you just click it and then the line would be gone. Because what Excel does is when you copy and paste, it copies the format as well. That's the default function. So if you want to remove the format but just keep the formula, you can just choose the formula to be copied only. Then it's time to calculate net operating income. And how would you calculate net operating income in this case? This is a subtotal. So gross profit minus depreciation minus sell admin minus other. Right? So you're just subtracting everything from the gross profit. And then it's time to calculate earnings before taxes. Again, it's a subtotal, and how would you calculate it? It's net operating income minus interest expense, right? And let's calculate taxes. Tax amount is always decided by earnings before taxes. So this one times the tax rate, and your tax amount is just calculated. And your bottom line, net income, is, of course, earnings before taxes minus taxes. And there you go. You should have net income of 16,371.